We are talking mortgages on this Finance Friday. Good morning to First Ontario's Dave Schurman.
Good morning, Annette.
There you are. Good to see you again. So rates right now are at record lows. Could they still drop more?
Yeah, they are at record lows. They may drop low. I mean, there's not much lower to go. It's almost like a race to the bottom with financial institutions now with mortgage rates, where you can get a high ratio mortgage. That's where you require mortgage default insurance at 1.9%, 1.8%, maybe even lower, and a low ratio mortgage where you don't require mortgage default insurance is right around 2%. So they're very, very low. I mean, there's a couple of key reasons for that. Mostly it's related to the pandemic. And the Bank of Canada, they've indicated that they're keeping their benchmark overnight lending rate very low for the next couple of years. And the reason for that, of course, is that the government of Canada has spent a lot of money helping individuals and businesses throughout the pandemic, and they've run up large deficits and national debt. And the government's no different than you or I. If you have to borrow money, you've got to pay interest on it. So when interest rates are low, it benefits the government by making it easier for them to carry their debt. It also keeps the inflation rate going because right now we have practically no inflation. That's not good for the economy. So low interest rates will stimulate the economy. People will borrow more and spend more and get that inflation rate up a little bit, which the government wants. And another key reason is that, funny enough, during the pandemic, and we've talked about it on Finance Friday before, savings rates are at an all-time high. People are saving money like they've never saved before. What that means for financial institutions is they're flush with cash, and it doesn't help them by having it sit in their vault. So they've got to lend it out, and it creates a little competition for mortgage rates, and that's good for all of us.
Right. So what's better right now? I know there's at different times in economic history, it's a fixed mortgage rate could be better than a variable. I'm assuming a fixed is better right now.
Yeah, most Canadians at all times, the majority take a fixed rate, even when it's not the best option because there's more certainty. But certainly the best time to take a variable rate is when rates are higher and on the way down, probably. Mm-hmm. If there's an indication that rates may go up at some point, variable may not be the best choice. So personally, I would suggest taking a fixed rate. Again, you're going to have cost certainty on your payment for the next 5 years, and your rates probably aren't going to go much lower than they are now anyway. So fixed, I would say, is the way to go. Right.
A good idea right now to remortgage, maybe if you're doing home renovations?
Yeah, for sure. I mean, there's a lot of home renos going on right now. I mean, swimming pools and people getting the basements done, creating home offices, obviously, because a lot of people are working from home and homeschooling their kids. So it's a good time for home renovations. And, and you have to pay for those, obviously. If you got the cash, that's obviously the best. You don't have to borrow for it. If you don't have the cash, certainly a mortgage at these rates are better than a personal loan rate. Or a line of credit. Certainly don't put those things on a credit card. If you're going to buy a hot tub, don't put it on the credit card. Find a better way to do it, and remortgaging is probably a great idea.
Okay, and there's been some speculation too that like housing prices right now are through the roof. Some speculation that's because of low mortgage rates.
That certainly adds to it for sure. Obviously, people, if they can afford more home, it's a good time to buy now with rates so low. But really, housing comes down to supply and demand. March, April, May, June, there wasn't much moving in the real estate market. But July, August, September, we're setting records now in sales. And sometimes there's bidding wars on homes when people want to buy them. So that obviously drives the price up. Real estate eventually, even if it does go down a little bit, eventually it's going to go back up. So real estate's always a good option. If you're trying to time the market when house prices you think might fall, it's not a good idea. It's like trying to time the stock market. It's not easy to do. So if you need a house or you need a remortgage or you need to do some home renos, there's no better time to do it than now when rates are so low and you can afford it.
Okay, thanks, Dave, very much. You can email your questions to Dave at FinanceFriday@FirstOntario.com or through Twitter at @finance_Friday. And if your question or topic is covered on air, you'll get a gift card from a local business in your community. Thanks very much, Dave. Have a great weekend.
Thanks, Annette. You too.